and get started. Folks will continue to log in. For those of you who don't know me, my name's Tom Glassick. For the purpose of this call, most importantly, I am the Vice President of the National Flood Association, and very happy to see so many, NFA members preparing and registering. We were, well over our last call, and this is just NFA members. So when the calls that we open up to the general public, I think we're doing quite well with the webinar series. I'm not going to thank COVID for the development of this webinar series, but before I do the introductions, it's kind of a whole you will be able to see in the chat function, and we will take questions at the end. If you could hold those questions until the end, that would be great, just because it's distracting for panelists to try to be looking at those. And honestly, if you throw in questions very early, the likelihood of them being the questions that I get addressed at the end are less likely. So welcome. We've been doing this the last couple of years. This is a recap of the 2022 midterm elections and ideas about what to expect in the 118th Congress and how this impacts both the National Flood Insurance Program and also many of you, on the call are insurers, are lenders, are claims about, who have curious questions about what Washington is going to move in those sectors beyond that, or beyond the NFIP. So we'll also try to spend some time there. Obviously, I'm no lending expert, but Alden is. So our panel today is populated with just some of my favorite people. Chris Brown is a partner at Mindset now, which is a multi-client government relations advocacy firm in DC. His practice focuses on insurance, banking, and capital markets, but Chris has been a good friend from his previous incarnations. Chris was a long-serving member on the House Financial Services Committee, where he originally worked for Congressman Blaine Luetkemeyer. Those of you who've been watching this space for a long time know how active Congressman Luetkemeyer has been in the space for as long as I can remember. And after working with Mr. Luetkemeyer, he worked with Patrick McHenry. Patrick McHenry is the new chair of the House Financial Services Committee and a very thoughtful legislator who we enjoy working with. Before his illustrious Capitol Hill career, Chris was also in the George W. Bush administration. So long story short, Chris knows how Washington works. And because we're focusing on schools today, because two of the people here I'm co-alumni with. So Chris, I can't, unless we go back to school, he has his bachelor's and master's from Vanderbilt University, which I have not attended, but I might. So next on the list is Brett Hewitt. He is the Vice President of Federal Government Relations at the American Property Casualty Association. Brett joined the Senate Banking Committee in August of 2010, right after Dodd-Frank finished. And Brett loves reminding all of us that he got to clean up all the mess, all the paper mess that was made from Dodd-Frank. When Brett was finished working for the Senate Banking Committee, he went and joined the then newly minted Federal Insurance Office. And from the Federal Insurance Office, he spent some time in a senior policy role at the U.S. Department of Commerce. I guess it's kind of, I don't want to be redundant, but kind of like Chris, Brett knows how Washington works. Travis Johnson is a graduate of the College of William and Mary. Oh, I should put that at the end, right? Graduate of the College of William and Mary. Travis as well. I can't remember not knowing Travis in flood world. He's been a consistent part of our world. He was the Deputy Chief of Staff for Senator David Vitter. He has worked with, I don't know anyone who can spell flood in Washington who doesn't know Travis Johnson. In addition to his work just in general flood, he was quite actively involved in the HFIAA process in 2014, or sorry, yeah, 2014. And in 2016, Travis started consulting with and helping people who are trying to navigate and Travis works with some of the largest companies and some of the smallest companies trying to navigate these issues around Capitol Hill. Alden Knowlton, I don't know as well, but she is the assistant vice president, the associate vice president of legislative affairs at the Mortgage Bankers Association. Mortgage Bankers Association is a brand new NFA member, so thank you. We're very happy to have you as a new member. And Alden has got the politics things all the way through her career. She's been at the NBA for a long time. She is one of very few folks who I know who, did work in the PAC space with the political action commission and the fundraising side of Washington, but she has her policy chops up, and it's just wonderful to have someone who has those perspectives. A lot of us who are just policy nerds don't always understand how the bigger parts of Washington work. So thank you, Alden. And Lauren Packman is the general counsel and the director of regulatory affairs at the National Association of Professional Insurance Agents. Lauren is also a relatively new NFA member, and she's actually a new member of the NFA board of directors. So thank you, Lauren, for helping even more. Lauren, before she went to the PIA, she was at the American Academy of Actuaries. A lot of us in DC joke that that's like the training ground for insurance policy people. And so many of the friends we work with started their careers at the American Academy. I think eventually the American Academy is going to get mad that they keep training people, moving them on. Lauren is a graduate of the George Washington University Law School, as am I. So she's the other co-graduate or co-alumni on the panel. With that, I think we're ready to go. This panel was designed before the holidays, when things were maybe a little less, were looking a little less exciting and interesting, unusual in Washington. We were just going to have a flood conversation, and we were going to be our flood nerd self. But given things that have happened in the House of Representatives, both the extended speakers race and revisions to the House rules that are things many people haven't seen before, I decided that it would be a good idea to start the conversation off a little broader than flood. I know people who aren't in Washington and who kept turning their TVs on last week and said they're not done yet. They're not done yet. So I just kind of want to do kind of a open panel discussion. Maybe whoever's got a couple things to say. Because I went to Catholic school, let's do it in alphabetical order. Chris, do you want to start?
Happy to, Tom. Thank you, and thanks everybody for having us. Tom, I don't think you can make introductions of some of us saying they really understand how Washington works after last week. I think that's grossly unfair of you, because last week is not indicative of anything that I've seen in Washington, and certainly not something we've seen since, I don't know, well over 100 years. Look, as the dust settles around the speaker's race and the 15 ballots, I think there's some real implications, and particularly around the House is going to govern and the rules package that was narrowly adopted earlier this week. Just to give you a snapshot, I won't be too wonky, but all bills have to move through regular order. That means all committees are going to go through the long process of amending legislation. The speaker, my understanding is that he's committed to a balanced budget in 5 years. Just to give you some context, typically the conservative wing of the party in the House would offer a balanced budget in 10 years, and this is 5. So if that's the case, one, that's going to be very hard to pass, but two, the budget cuts that we're going to have to endure, even hypothetically in a budget exercise, are going to be pretty dramatic, right? And that's going to have a lot of implications potentially for the NFIP and for FEMA, but really across the economy. 3, we're going to have an appropriations process that's open rule. That means we're going to do 12 bills that will go to the floor. Anyone can make amendments. It is going to be a painful and painstakingly slow process. Now, some argue that this is the way that government should work. This is the way that the House of Representatives should work. But it is going to be kind of the timeline for activity is going to be pretty unprecedented. So, that's kind of my nutshell on the policy side. On the political side, if you've learned nothing over the last week, learn this: never underestimate Kevin McCarthy. So people are often saying, oh, he's going to be here for 1 month, 2 months. He's going to have one bill and be gone. Look, don't underestimate him, right? He's got a bevy of lieutenants that are very politically savvy. And he's a fighter. I think we've seen that. It's going to be tough for him, but he'll last a little longer than most pundits are expecting. That's my
I think
sunny, exciting recap.
I think that's really wise. His lieutenants are good, solid people. Yeah. Brett, any other perspectives?
Yeah, well, I guess I'll start off and just say that I worked in DC for a long time. I think one of the skills is to be smartest owner anywhere here. So, having served in the only, I would the from Chris. So I would agree with everything said. It's definitely not going to be a calming Congress or the usual kind of thing. I would also just kind of flag, I don't think that it's caught a lot of press or attention, is the intersection of the new House rules and how it's going to impact the work of the Senate. I think that, the focus on single issue legislation, which I think is, no matter what side you're on, if history of flood, that's not really how. So I think that is something that should be taken into account. But that's the only thing I would add.
I'm not trying to do point counterpoint, but Travis, you're next alphabetically, so I am.
Yeah, happy to. I'm with Chris. I would put the legal limit on Speaker McCarthy well over whatever prognosticators' lines give you. Seems to be he has an A+ team, both members and staff working for him, clearly willing to cut deals, and that was, I think, a master's class in moving votes. And I also think that when, my experience, having worked on Capitol Hill for a while, is that when you have kind of a bloodletting family feud like that, they don't pop right back up. The tension gets released from the room, and the members who had been difficult are a little less willing to step back into that for a time being. Without real justification. So, I think that we've seen that leadership dynamic play out. I'm old enough to remember when appropriations bills went to the floor under open rule, and then graduated to more of a modified pre-printed open rule, where if you filed your amendment, you were going to get your vote. I think in general, more amendment votes, while a drag on the schedule, tend to be good to release the pressure out of the chamber. That's not some, it's a problem that we've seen grow in the Senate over the years too, as leaders of both parties have eschewed from the old traditions of putting a bill on the floor for 2 weeks, letting members duke it out before filing cloture. And I think those sorts of things are good for the process, and setting the chambers up to find agreement on the things that they can agree on. Although, this divided government, divided Congress, you're going to see a lot of talking past each other. But for me, I think we're coming into this week with a pretty positive outlook, that the House has organized. we see members being populated on announcements from Republicans about how they'll populate committees, and then we'll be off to work.
Okay, Alden, what are your thoughts?
Well, I think I'm the only Democrat on this panel, but so, I mean, last week, my joke internally has been it was great for memes, not really great for governing, but and that remains to be seen. I do agree with some prior points made whenever you have that kind of skirmish in public and C-SPAN, because the rules hadn't been organized and because it was a major event, C-SPAN had some pretty unique camera angles and coverage, not only in video, sometimes in audio, and some of those photos and footage will kind of last well beyond. So I think, I think there's going to be many in the Republican conference who are going to want to move past that and not use that motion to vacate lightly. And luckily for Speaker McCarthy, a lot of that kind of angst that maybe would exist there if they hadn't passed an omnibus at the end of last session is gone. So his first real test is not going to come for several more months, in my view. And then for Democrats, it was kind of a good week politically. And again, that's not the kind of drama we want to see or math errors that we want to see in Congress. But after kind of years of this Dems in disarray narrative, you finally had vote after vote of unanimous. I think they had 212 votes every single round except for one, and that was because David Trone of Maryland was in shoulder surgery that had been previously scheduled. And so entering in with this new leadership on the Democratic side, you'll recall that for the last 20 years, they've had the same three, Nancy Pelosi as speaker or leader, depending on the majorities, Steny Hoyer as that number two, and Jim Clyburn as number three. And there was this big push among the Democratic caucus for a new generation of leadership. And that has come in, and they solidified that at the end of last term. But Hakeem Jeffries from New York is now the Democratic minority leader. Catherine Clark from Massachusetts is the Democratic whip, and Pete Aguilar is the caucus chair, and Mr. Clyburn from South Carolina, and Pete Aguilar is from California. And then Mr. Clyburn from South Carolina is, Democrats love our participation trophy positions. And so Mr. Clyburn's going to stay on in a position that was created after the big midterm shellacking of 2010, where Democrats lost 63 seats and wanted to create a couple of extra positions to kind of keep the caucus together and keep the same three in leadership. And so I think from a political standpoint, that last week was very good for Democrats because it got to introduce this new round of leadership, and they got to come in a unified way, which, there's a lot of question marks when you have someone like Speaker Pelosi, who's been around for a long time and who has her own legacy that she's established. It's always kind of hard to kind of fill those shoes or fill those stilettos, depending on how you look at it. And so I think from a political standpoint, Democrats were feeling energized, and they got to focus on some of the issues that they wanted to keep front and center rather than some of the divisions that we saw play out both among their caucus the year and two before, but also on the Republican conference side last week. And then I would echo, I think legislating is going to be difficult, but it remains to be seen what that looks like as we're still kind of recovering. I mean, committee assignment announcements are coming out as we speak right now. So there's still a lot that we don't know.
Okay. So for those of you watching, on a process point, there was some trouble getting the chat up. So if you will refresh your apps, that should be fixed by now. I can't tell you that I understand what that means, but that's what I'm being asked to do. I give Chris Brown and Travis Johnson bonus points for keeping composure when Ali said she might be the only Democrat on this panel, because Chris and Travis know that I come from a Democratic staff background, and I think our next panelist, I can say, fits in that category. So we're a pretty balanced panel.
Maybe.
So Lauren.
Oh, that's me. Thanks for having me. I want to say first and foremost that a lot of you all took the things that I was thinking, but I will say a couple things. And One is that, the fight last week, certainly it showed that McCarthy is not one to give up. But it also showed that some members of the House Freedom Caucus are willing to kind of make the whole party look not great in the interest of getting what they want. And they were able to extract some concessions from Speaker McCarthy that I think are going to, very hot take here, weaken the speakership. One of the things I think is kind of interesting about it, though, is the decentralization of power in the speaker is going to inure to the benefit of obviously factions within the Republican Party, like the House Freedom Caucus, but also factions on the Democratic side. And I think on balance, it remains to be seen how that's going to actually play itself out over the course of the year. But I think it imbues all of the sort of subgroups within each party with some additional bargaining power that they didn't have before. So I think it'll be interesting to see, especially with the very slim majority that Speaker McCarthy has in the House and the very slim majority that Senator Schumer has in the Senate. It'll be very interesting to see how all of that plays out and how everybody uses the power that they have to exact, some bargaining, some favorable outcomes on particular pieces of legislation. But we'll have to see how it all shakes out, and whether that decentralization actually comes, whether people actually exploit it the way I think it's possible to do so.
Okay, thanks everybody. And I think we could have merged questions 1 and 2, but I think now that we've kind of laid the stage, maybe we want to do a lightning round on what the heck does this mean to the NFIP and to our larger industries. But Lauren, since you got preempted by other people last time, you get to go first because we're doing reverse alphabetical order. So, let's, in a quicker way, let's boil down what kinds of things should we be looking for? And some of that came up in the last conversation.
Yeah, I think I still think that we can see reforms to the NFIP in the current Congress, the melee of the last week notwithstanding. I think what we're going to be looking for are things that are going to be narrowly tailored to go through the process of being considered and amended and the sort of traditional process that like Chris said, we're sort of returning to, and the provisions, the types of policy actions that I can see having legs right now, given the circumstances, are things like maybe an affordability framework, if we can get something that appeals broadly enough to the various coalitions that need to come along. I think continuous coverage is something that has been bipartisan for a while and should just go, like just write the narrowest bill that you can that just provides for continuous coverage. Let's get that passed. I think there's been a tendency to make the perfect the enemy of the good in terms of trying to assemble the perfect flood package, and so nothing passes. And I think if we can take this opportunity to pass the things that are passable, even if they're in smaller chunks, that might be the way to ultimately get where the NFIP where we'd like it to be. I think the last thing I want to say is just that the main thing is to give Congress the breathing room and the incentive to give them enough breathing room. By breathing room, I mean enough time in reauthorization to actually consider the substantive reforms that the program needs, and to the incentive somehow to actually consider those reforms during the time that they buy themselves with some length of reauthorization that's longer than, say, 6 months.
Okay.
Sorry if that wasn't concise enough.
Everyone has a different definition of lightning. No No pressure, Alden. But I mean, and obviously people don't, if there's nothing else to add, don't feel like you need to speak. We can keep rolling. But are there things, as you take the perspective of last week and the rules change and everything else, things that you think are going to really impact the flood reauthorization thought process, or does it even know? No, what does anyone even know yet?
So, yeah, I mean, I think we don't know what we don't know, right? I think last week was what it was. I think I would have had the same answer before last week as I would this week. I don't think last week is influencing my opinion on how difficult it's going to be to move really anything. I mean, some of the rules changes, of course, with, one subject, per legislative vehicle, and having some limitations in terms of scope, might be interesting to see how they play out. But no, in my view, I don't think last week really has any bearing. I mean, the margins are what they are, and that was always going to be a tough hurdle on the House side. And then you have varying priorities. I mean, you like with Senator Scott, for example, Senator Scott and Patrick McHenry, there's a lot of daylight between some of the priorities that they even have, and you're talking about Republicans. So I think, and then of course you have a small Democratic majority in the Senate, and then a small Republican majority in the House. I think there's going to be a lot of negotiating, I think, over the coming months to see where they can find alignment. But the do the doable, win the winnable is always our motto here. And I think that's going to be a big one for a lot of people across the board as we watch things play out.
Okay, Travis, kind of the same question, but do you mind if you're comfortable just rolling in your thoughts about what the differences is? Obviously, it wasn't as dramatic in the Senate last week, but we do have a slightly different structure. We have a new ranking member, so
Yeah, so I would say I'd agree with those who have agreed that last week, and maybe the makeup of this Congress hasn't really changed my mind about what is possible in terms of flood. The issues in flood are still the same issues. I'll put my hand on the third round, say until there's a compromise between the two sides on oversight and implementation, or FEMA finishes implementing risk rating 2.0, I don't think a deal comes together. And then I think once we've passed that hurdle, it comes together pretty quickly. There's some daylight between Mr. McHenry and Senator Scott. Senator Scott isn't a stranger to the flood program. He's supported reforms in the severe repetitive loss space. I'll try to avoid coloring that as an environmental friendly provision. Chris, I'll let you take that up. But Mr. McHenry and his colleagues are tired of short-term extensions. We've seen them sign on to legislation decoupling the flood reauthorization from spending. And we have somewhat recent history under former Chairman Henserling of that approach. Mr. McHenry has worked with then Chairwoman Waters on a bipartisan flood bill that passed committee unanimously. So the pieces are there if it's given the priority and kind of put to the front burner. I don't think it'll be front burner right away for the reasons I said on risk rating 2.0. And I think there are some other challenges the committee in the House wants to tackle first. But that said, I think, the dynamics are there for a deal on flood. The question is, will there be enough time when we reach it?
I think that's quite fair. Mr. Hewitt, you have more perspectives from the Senate. We should probably have to explain to you there are things in the House called rules. There are no rules in the Senate, I understand.
One could argue that there are more strict rules in the Senate. And I'm sorry, I don't know if everybody can hear. Have some technical issues, but I agree with everything that's there and said. But I do want to kind of highlight the issue that Travis just brought up, because I don't get what happened in the House only changes the outlook on a flood package, whether that was likely to begin with, or really highlight or is important to look at is, before you get to the long-term stage, is how is it going to impact the reauthorization, whether it's short-term or what. And as Travis mentioned, you have seen on dealing the extent the funding bill, depending on how aggressive the House Republicans' new rule package are about adding appropriation bills and so forth. I've seen this game before, and it's resulted in lapses in programs. So I don't think recently is mentally are from a large, but I do think that it could have some pretty impactful effects on program apps, whether it's for a week or a month. I think that area that it could have some.
Okay, and Chris, you started us off, so you wrap it up. We probably should have actually given a 15-second what the heck the House rules are and why this matters. So if you want to do that, but any other insights you have before we move on to things that aren't involved with last week?
Yeah, I don't think anybody wants to be awake for the House rules, although they're fascinating to many of us. Let me just comment on flood really quickly. Agree with everything that's been said, Lauren. I think your comments on, targeted solutions and, smaller bites at the apple, I call them, I think is spot on, right? At the end of the day, the majority leader who controls what legislation moves to the floor is from the state of Louisiana. He is very well versed in NFIP, and he doesn't like it, and he doesn't like risk rating 2.0. That has been a factor. It will continue to be a factor this year. The speaker, the newly minted speaker, is from a state that is being absolutely devastated by storms statewide. So we'll have to see what the aftermath is there, and if there is if there's an impact on the NFIP, and that's happening across districts, right? Across states and across congressional districts. We're seeing more flooding. We're seeing greater losses. And it is starting to really resonate among Republicans in the House. So, look, I think I am optimistic that a long-term NFIP can be done. Travis is right. We hate the short-term kick the can. We don't like hearing from realtors every other day screaming and yelling. No offense to any realtors, but I think you're all mortgage lenders, so they probably scream at you too. But we need a long-term solution. If we're going to get that, it's going to have to deal with affordability, and it's not going to touch actuarial rates. So I think a lot of the resiliency stuff is ripe for the picking. It's going to be modest.
Okay. No, the California activity is going to impact. We're unfortunately, what we're seeing early on is a lot of the impacted places do not have high policy counts, for those who haven't been paying that much attention. So let's change perspective a little bit more and be a little more prospective. Yes, Steve Scalise is not going to let, and nor is Senator Kennedy going to let risk rating 2.0 go. But bottom line is it's pretty baked into the system. There might be more information available about things, but pretty baked into the system. So I'm not going to say we're over risk rating 2.0, but I'm going to kind of throw to Lauren and Chris. I don't know if I said it in Chris's introduction, he also helps lead the Smarter Safer Coalition. So I'm going to kind of throw to Lauren and Chris, what are the emerging issues that you see on the horizon in the coming year that we haven't already touched on?
So one of the things I think that can be maybe misunderstood if you're not like neck deep in risk rating 2.0 is that first off, not every policyholder is on risk rating 2.0 yet. The last tranche of them are going to move from the old system to risk rating 2.0 by March 31st. And then everyone in the flood program will be on risk rating 2.0. And the other factor is that risk rating 2.0 for some people just means you get your new, my light just went out, it's fine, happens all day. Anyway, so I'll just be in this ambiance. The other thing is that because some people have right there, risk rating 2.0 rate is their rate and it's set and they're not on the glide path. But for a lot of people, they're on this glide path where every year their rate is increasing until they reach full risk. And that means that, and I don't know how long, and I don't know if FEMA knows how long it's going to take all of those policyholders to reach full risk. But what it means is that there are going to be a lot of policyholders that are on this path increasing year after year after year. Obviously, there's a cap on the increase, to which they can be subject each year. But it means that the sticker shock of risk rating 2.0, unfortunately, is not something that's sort of over, I think, for some policyholders. And I am concerned that in areas with higher housing burdens, where housing is a high percentage of people's household income, that we're going to end up seeing potentially defaults or foreclosures in areas that are sort of hardest hit by this endless march of increasing rates.
Okay, Chris, because we did reverse alphabetical order, you want to kind of wrap up what are the things, and to the extent to which the Smarter Safer Coalition, it doesn't, I know that folks are interested in resilience and things beyond that. I don't know what your top, well, I should, because I get all the emails, but I don't know what your top initiatives are for the year. So,
well, you're clearly not paying attention to anything I do or say, which is not surprising. One, Lauren's right. Like risk rating 2.0, yes, being phased in over time, still very, very much, very prevalent on the Hill, and they are definitely watching it and do not want to do anything, to Travis's point, until risk rating 2.0 is completely enacted. So beyond that, yeah, look, it's resiliency. That is a huge opportunity, I think, in the NFIP and beyond, right? Not just in the Financial Services Committee space or Senate banking space, but across the board in, frankly, all committees. So pre-disaster mitigation efforts, incentives for communities and for homeowners to do pre-disaster mitigation, nature-based resiliency, resilient infrastructure funding, which we saw out of the bipartisan infrastructure bill. All of those things I think are very tangible right now. And through my conversations with House and Senate Republicans, they get a lot of support. So I think all of that is really does have the potential to come together and move. So that to me is the biggest thing outside of the core NFIP framework. Okay,
and Alden, you're our lender person. So us insurance folks are interested in, the FHA rules finally came out. How long did we wait? So one could say everything's fine, but one could definitely say there are things that are on your horizon. So what's coming up?
Yeah, I mean, honestly, there's any number of things I could touch on. One I would flag for the broader is just Republican oversight in general on the House front, and that has been a shared frustration with many rank and file Democrats on the House Financial Services Committee about this lack of oversight, where it's almost like Congress is asking permission of the administration to come in and testify about some of these big, major, broad rulemakings that have been coming out of SEC and CFPB and even FHFA with some of the housing goals that they've been putting out there. So we'll be working in tandem with Republicans to kind of put them on the record and talk through some of these kind of broader issues. Obviously, the CFPB and the Fifth Circuit ruling that happened towards the end of last year is something that we're going to be monitoring. And for folks unfamiliar, that was really specifically geared towards the payday lending rule. And finding that the funding mechanism of CFPB was unconstitutional, and we still need to see that play out with the potential Supreme Court activity. But that could be something on the legislative front that happens very quickly, where we're trying to work with both sides of the aisle on some sort of legislative solution to come up with what would result from however the Supreme Court rules. So I mean, that's something that we're monitoring. Obviously, housing affordability is something that used to be more of an urban issue, and is now increasingly, we're getting questions from folks in rural areas who represent rural areas and rural communities, all the way to these really high density populations. And really, sometimes that's just finding a way to have definition. I mean, if you say affordable housing, some people think Section 8, Section 9. They're not talking about literally just affording where you live or where you work. And so talking through that, but the challenge there, similar to some of the challenges we see with NFIP, is it's just this decades of neglect in a system that has a lot of local and state and municipal solutions, and maybe not always a federal one, and kind of getting folks on the same page on the politics of the day is very difficult. And we saw that throughout last year with the Build Back Better that turned into an Inflation Reduction Act on the House and Senate Democratic side, with housing being consistently kind of struck out in terms of priorities, because it's always in everyone's top 5 or 10 issues, but when you narrow it down to top 3 about trying to solve something, it kind of falls by the wayside. So we'll continue to push for some of the affordable housing tax credits, the Neighborhood Homes Investment Act from last year, that was a newly proposed tax credit to incentivize the rehabilitation of blighted properties in urban and rural and distressed neighborhoods. And of course, enhancing and expanding the low-income housing tax credit. But that, again, you're talking about hurdles to getting something like those passed, especially with the high inflation environment that we still find ourselves in. That's going to be very difficult. And then on the FHA front, of course, we continue. And the administration hasn't put out a new budget request for FY24, but we continue to urge the administration to make FHA loans more affordable by reducing mortgage insurance premiums as soon as they are able to kind of put that into their FY24 budget request. So that's something that we'll continue to push. And then, IRS is going to be a punching bag, as it always is, but we have an issue before IRS too with their flawed implementation of the Taxpayer First Act, which was one of the most significant pieces of IRS modernization that had passed in over 20 years. It passed in 2019, bipartisan bill, and it had instructed IRS to modernize the income verification part of its program, where the lender, on behalf of the borrower, sends this tax transcript to a fax machine. I'm not kidding, at IRS, and then the IRS sends something back to the lender that verifies that borrower's income. And this process can take 5 days. It can take 20 days because there's a backlog at our IRS always. And the lenders were charged a fee to pay for this upgrade. And instead of developing a real-time kind of API, the process that they're following right now would actually require the borrower to exit that lender application or portal, go to IRS, create a username and password, and then they would tinker with something, and then that would come back to the lender. So it's still adding this really clunky system. So we were able to work with Patrick McHenry, who is now the chairman of House Financial Services Committee, and Jimmy Panetta, who was on Ways and Means. It remains to be seen if he'll stay on Ways and Means because of the margins on the Democratic side. They did introduce a bill at the very end of last year that would clarify that the users of the system are the financial institutions, not the taxpayer, for this particular provision. But that's just one of many issues that we're going to try to see if we can get some oxygen in the room on, because there's going to be a lot more politically charged discussions surrounding the IRS, and we obviously saw that play out already this week with some of the activity on the House front. So we'll be busy, but there's no shortage of issues that we'll be monitoring. And again, a lot of this will result in the regulatory agencies becoming maybe empowered and emboldened, and that's something where, because we have divided government, we can really work with Republicans on the House side in particular on some oversight and additional oversight, and getting some more answers from the administration on paths forward for some of their initiatives.
Hey, Brett, this is no fair, but I left you out of the what are insurers thinking about the new year. If you've got things you'd like to add, please do so. I'm going to ask we're getting ready to go into Q&A, and thanks everyone for not peppering the chat with them while we were talking. But if folks want to start sending in their questions, while Brett gives us what keeps him up at night about the NFIP that's not risk rating 2.0.
Well, I don't know if it's risk rating 2.0, but I do think that, while I everything we said, that risk rating 2.0 is here to stay. From an operational and pragmatic aspect of how the WIOs communicate with FEMA, the new systems, and that I think that is, whether that's specific risk rating 2.0 or the new structure, I think that's going to be one of the biggest things that insurers are going to be dealing with, as well as, again, just making sure that this RAM is set.
Okay, so while folks are getting their questions in, I obviously everyone on the call is an NFA member, but everyone might not be on the NFA legislative committee. If you are not and you'd like to be included going forward, please please contact and let us know. I think that our team can probably throw an email address in the chat so folks can do that so we can get included, because there's other stuff going on. Some of it's not quite as sexy as what we've been talking about. Not that last week was very sexy, but there's two things that are happening. In September, FEMA shared information about reorganization within FIMA, which has been part of FEMA, and so that FIMA would be dissolved up into FEMA's resilience division. David Marstad, who you know has been leading FIMA for many years, has been promoted up into the resilience space, and it's a work in progress, and we are following. There are folks in the mitigation world that are a little bit concerned about the disassociation between resilience, mitigation, and insurance that's existed in FIMA for so long, but it's something that we'll be discussing on the NFA Legislative Committee calls and just kind of watching it. And the other kind of interesting thing, and I alluded to this earlier, is the other part of, or one of the other parts of FIMA's modernization had to do with the standard flood policy, the SFIP. No, yes, the SFIP, standard flood insurance policy, and we got an indication that we're going to finally see their proposed new homeowner flood form, which would take the place of what we've all been paying attention to for many years. There's been aspirations to add ALE, basement coverage, some other things that we haven't had in the SFIP in the past. So we'll be watching that space. We anticipate the most recent bulletin from federal government said it was going to be published on 12/00/2022. I looked at my calendar. I didn't see a 12/00/2022. But one would think it would come sooner or later in 2023. I'm going to open this to everyone, but I'm really thinking this is a Travis question. Many expect the debt limit fight, or the debt limit challenges later this year will be a nightmare. Any effect on the NFIP?
Well, I mean, I think the potential for government shutdown is a bigger impact than the debt limit. I think the debt limit will be a lot of noise and brinksmanship, and then some moderate level deal cut, whether that's this fall or if the debt limit somehow sneaks into 24, then. But I do think the thing we're going to continue to see out of the House Republican Conference is a newly refound insistence on fiscal discipline as a way to help soften the steps that the Fed has to take, and potentially help find a softer landing to this correction on inflation. And the way you see that is in spending cuts. I expect them to go after unspent money in any of the previously passed. I don't know if there's any CARES Act money, but any of the two reconciliation bills that the Democratic majorities passed the last Congress. The question will be which of those remain sacrosanct. If it's all of them, then the debate over spending will get much sharper. So I think that is a bigger impact. And do we hit a shutdown? Are we able to separate flood. There'll be some, government lending programs that I'm sure the banker folks will be paying attention to, both at ag and FHA, and those type of things have impacts, and we've seen shutdowns last as long as a month plus over various different things. And so I think that will be a larger impact than the debt limit.
Huh, that's interesting. Well, I mean, hopefully the debt limit and the spending deadline don't happen on the same day, or that could be quite a day. Anyone else with thoughts about that? I know debt limit and NFIP aren't necessarily associated, but just dysfunction might impact.
I was reading recently, since the speaker fight and the rules committee vote and all that, the debt limit could be an issue as soon as August. So I don't know that they'll happen the same day, but it does cause me some extra heartburn to imagine that as we get into September and the fiscal year ending and the need to, I guess this goes back to, right, whether Speaker McCarthy is able to stick to his plan of doing individual spending packages and not needing to do something big right on September 30th to keep everything funded. But I share Brett's concerns about, or Travis, about the flood insurance program lapsing if there's a government shutdown. And I think that is a non-zero percentage possible turn of events. And I think it could just be complicated if the timing of the debt limit issue happens to fall around the same time.
Tom, can I just add one thing?
Please.
So look, yes, and there's been just a ton of, I think I said this in the opening, at least I had prepared to, but there's been a ton of interest on the debt limit. If we hit extraordinary measures in August, maybe it's May, maybe it's July. I mean, part of that is really dependent upon Secretary Yellen or whoever the Treasury Secretary is at that point in time. But the one thing I'll say is, like, that's light years. Like, we could be on our fifth speaker by then. I mean, who the hell knows, right? So
you said not to underestimate Speaker McCarthy, right?
Well, you don't look, Lauren, what I'm saying is, like, by the time we hit your extraordinary measures, who knows what's going to happen. But yeah, I guess I'm contradicting myself. Very Republican thing to do. So just kidding.
Democrats never contradict themselves.
Yeah, no, never.
I'm just trying to figure out where I should put my money. That's all.
I think you shouldn't gamble. It's a sin. I think that, I think what we really need to pay attention to is, let's look to see how the first approach process plays out, how the budget process plays out before then. And that will give us a sense of how McCarthy is going to handle the debt limit down the road. But it is, I shouldn't have said that about Kevin. It is light years away, though, with all other respects, outside of the speakership.
There's also, we don't want to get wonky, I know earlier about the rules, but there is a new mechanism that if Democrats were to be able to flip 5 Republicans and get the majority they need, 218, to move around House leadership, a discharge petition, they could ostensibly circumvent Speaker McCarthy with, if Democrats could stay united on whatever, raising the limit or however they would, decide to craft this particular piece of legislation, and they could pick off enough moderate Republicans. There's 18 Republicans sitting in Biden 1 districts. And if this is all playing out in the fall, we're right around the corner from primary season. And that's right around when people are going to start to moderately pay attention to what's going on Capitol Hill, if they are at all right now. There is a mechanism that if you could get enough moderate Republicans to come on board, that the Democrats could do McCarthy a favor and circumvent. But that's also a big question if this new three in leadership want to do that.
Okay. Well, so when that happens, we'll certainly look to you as Alden as the conspirator, and Chris will know. It's, you know, we talk about the federal debt limit, but there is this little NFIP debt thing that's been hanging around since Katrina. You know, with the vocal things about fiscal conservatism and thing, you know, I know there's some concerns about forgiving the debt limit. I know, you know, but that can, so we're almost at the top of the hour. I think that would be a fun thing. Wow, my definition of fun's gotten really bad. A fun thing to talk about. Is there any relationship between, you know, we've been at a kind of a impasse on the debt, on the NFIP debt. It does not tie into the federal debt ceiling issue at all. It's already spent money. But anyone thoughts on that? That's a really good question, Scott Gibertson. Thank you.
Anybody?
I was going to jump in, but it looked like you really wanted to say something,
jump
Chris.
in, buddy. Go.
Look, like, I mean, yeah, I think full disclosure, having worked for a member of the Louisiana delegation for 7 years, you know, the argument that much of the damage related to Katrina was a function of man-made problems rather than just, you know, where the rain fell is persuasive to me. But I would point out more politically that the Trump administration was I believe the absolutely most recent, but maybe the first since Katrina to forgive some of that debt as part of a deal. And House Republicans in the majority at the time went along with that. You know, I don't think it's crazy to presuppose that there could be wrapped in a 5-year re-off with enough reforms traded off amongst the both sides to see some level of debt forgiveness. You know, that the Katrina month, look, I certainly understand fiscal discipline. You know, as I mentioned, that'll be a major focus of the party on spending. But, you know, the Katrina money is just never going to be repaid. The program was not built nor designed to carry that kind of debt and to deal with that kind of disaster. And it fairness, you know, matters some, but not so much in this instance. You know, it's not really fair to the program and the participants to you know, try to balance the budget of NFIP with that debt hanging over it. So, like, it's not crazy, but it's not an easy feat.
Okay, so we're at the top of the hour, but there were some facial expressions before Travis started to speak that make me want to make sure if anyone wants to add anything on that. If not, I mean, sweet, that's
Tom,
fine.
I'll just,
please.
Yeah, no, the thing I would say is that we talk about going even further. When you get into House CBO, the Congressional Budget Office, debt forgiveness, or other means to provide more, whether if we do have another big event that requires more, I think that will really depend on how CBO goes going forward, whether it's in historical way, and how that goes into pay-go or cut-go under the House rule. So I think that will largely depend on who's determining how this is actually scored. Well,
that's actually a very good point. How it scores, and that's even nerdier than the House rules. With that, we are at 3:01. We started at 2:02, so I think we are. I think we're done. I want to thank the panel. These are all good friends, but you know, it's a busy time of year, and for folks to take the time and do this, and all the guys put ties on for the first time in a long time. So I would like to thank the panel. I do not see in this app those little applause opportunities, but I'm sure there are many of them coming from the audience. So with no further ado, there will be another NFA webinar on the second Wednesday, so the 8th of February. It'll be claims related. You'll be getting information on that, and we're really excited about the fact that one of the good things from COVID is NFA got a webinar series going, so we can be in contact with folks throughout the year. So I hope those who've been able to watch, and this will also be available on the NFA website for members to watch in the future, or if some of your colleagues weren't able to join today. So with that, I will ask our tech gurus to wind us down.